Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. An unusual bullish engulfing pattern type action yesterday. Wasn't that hard to do. You see, it was a bullish engulfing pattern, but over the previous session's small bullish pattern, not a bearish one. It was like an inverted descending halt pattern, if you know what I mean. Additionally, the previous session was an indecisive spinning top. So you can see it wasn't that hard a thing to manufacture. Anyway, it was also a second consecutive close over the upper trend line, currently 74.62, of a possible descending expanding wedge pattern, currently 74.62 down to 69.15. Now, as you know, I haven't been entirely happy with this pattern. Hence, there's a heavy dose of the word possible in front of it. For starters, it hasn't completed the usual requisite 5 touches combined of both trend lines. Yet, leaving that aside for the moment, its short life and steep downtrend angle, if we set those aside, if we do that, we have such a pattern, then this may well be the confirmation that we saw yesterday of it. This leads to 2 diametrically opposed questions. 1. Is it a false break higher? 2. How high will the move be? Okay, so for question 1, well, we don't know yet. Not yet. And I'll leave it at that for the moment. For question 2, well, the primary target X would be in the 78.67 area, with a secondary and much harder to reach target X1 in the 78.46 area. These are big asks of this market, especially from what is in truth a not too good looking descending expanding wedge pattern. So what do we have above as resistances? Well, the obvious one is May's high at 75.99, and then the congestion around the January 2020 high at 76.30, and more recent 76.35 high. Meanwhile, on the downside, we have the combination of the 2 moving averages, the rising short-medium moving average, currently 74.31, and the medium moving average, currently 74.21. This last point brings me nicely to a new factor, which though lagging may help influence the bullish side. We have a golden cross this week of the short-medium moving average up over the medium moving average. And with that, I'll finish this section. So far today though, well, a lower opening and a dip down, but not that far, and prices have pulled back up, though we're still a little under yesterday. Well, I've just moved above yesterday's close. Interesting, right now it's looking like it's just like a second bullish white soldier that's building up here towards the highs. German DAX futures. Very interesting development yesterday with a bullish white soldier. The pattern itself was not that interesting, but what it did is interesting. So, the market has recently become entangled with a real mess of congestion consisting, and this is in no particular order, the upper tine stroke upper trend line, currently 14.029 of the January to March bearish shift pitchfork, and late March to date descending expanding wedge pattern. The neckline, currently 14.026 of the December 2021 to February 2022 head and shoulders top, plus a separate mess of resistances between 14.029 and 13.804, which includes the February 2020 low at 13.821 and the 50% Fibonacci line of the October 2020 to November 2021 move at 13.804. Hence, this is just a real mess of congestion at the moment. Anyway, the market pushed up and out of that mess, and even managed to push up and close over the February to date downtrend, currently 14.201. The result of this is that the market has taken the first steps in moving above the proposed descending expanding wedge pattern, which is a big step forward. I've therefore today placed the primary target X in the 15.440 area and the secondary and harder to get target X1 in the 15.725 area, and we'll see how these develop. So far today, a slightly lower open, but it's still above the downtrend. The market then moved down to the downtrend, but I suspect this was more for an ammunition gathering exercise, and prices have since moved higher up to test the next resistance, and this is a significant one. It is the 50% Fibonacci line at 14.343. Beyond that, we now have the rapidly descending medium moving average, And that's currently at 14,526 entering the frame. US E-mini S&P futures. A second bullish white sold yesterday and a suitable follow-on higher to the previous 2 days, thus making a 2-day bullish separating lines pattern. It was not a perfect example of such a pattern, but it still worked. The market opened a little lower, then dipped to the support of the February 21 high at 39.59, gathering ammunition in together before taking off higher. That was up through the 50% Fibonacci line of the October 20 to January 22 move at 40.18, then the May 21 low at 40.29, and the congestion at 40.55 before peaking at the declining short moving average, currently at 40.65, and dropping to close on the congestion at 40.55. Overall, this continues to be a pull up and away from both the lower time, currently 38.96 of the January-March bearish shift pitchfork, as well as the middle time, currently 38.56 of the bearish Andrews pitchfork for the same time period. Regular watchers and listeners will know I had earlier highlighted the crossover of these two times on Thursday last week as a period where one could expect one or more of the following. So volatility, a change in trend, or a reinforcement of a trend. As I previously said, this was an important time period, and hence I highlighted it with a red circle on my daily chart. Now I have also drawn another red circle for the next crossover to come for these same pitchforks, assuming that both pitchforks will still be operational, which they look like they may be. This is the upper time of the bearish Andrews, currently 42.31, and the middle time of the bearish Schiff pitchfork, currently at 41.96, and it will happen in a few days' time on the 7th of June. Hence, I renew my warning and what to look for. Look for volatility, a change in trend, or a reinforcement of trend, or probably all three of those. Now, one final point. All this action this week has initially countered last week's weekly key reversal down, but has not eliminated it completely, so caution. So far today, a lower open and a small move down, but the market has recovered and is challenging yesterday's high. The next resistance are the June 21 low at 41.26 and the nearby lesser Fibonacci level at 41.22, before we start looking at the upper time for the bearish Andrews and the middle time of the bearish shift pitchforks. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.